got quick updates related to Archegos, and I just wanted to bring you this first. You're looking at Credit Suisse, double-barreled financial crisis, shares, common theme, a bank that looked the other way when warning signs argued for pulling back on lucrative corners of its business. And they basically just get into the relationship in between the two companies, and they took some serious hits. Right now, $4.7 billion looks like it's going to be the hit that they're taking on this one, but also Greensill, they have not discussed or disclosed that information yet. So they are clearly in a very, very, unfortunate situation with this one particular bank. Right at the bottom, the bank is now in full crisis mode. Credit Suisse's supervisory board launched investigations into executives involved in decision making and also examining how years of beefing up compliance and risk, the bank pushed into risky trades that it couldn't easily exit. That's right. You're telling me all throughout this time, I have seen not just the comments, because of course the comments are always going to have nonsense, but I have seen people in the financial industry, I've seen the politicians, I've seen the analysts all tell us that the system is more robust than it was back in 2008. I have seen the reports and the constant and never-ending propaganda that comes our way. And yet, right now, this is happening. So is that true or untrue? You tell me. This article here is talking about Huang and his history, and you can find a lot about that if you are interested. And there's much to it, in fact. I think a lot of people were really uncertain. They didn't really know who he was. And apparently, if he had just sold off in March, he would have been a multi-billionaire. He would have been so successful. He didn't do the whole private jets and the 19 different luxury properties. He actually seemed like a pretty simple guy that loved to take big bets. In fact, as they say here in this Bloomberg article, leverage was playing a growing role, and Huang was looking for more. So that's what he did at the previous company. That's how he learned, basically, from the person who taught him. I forget the name. They mention it here. And so he did the exact same thing this time around and went a little overboard, I guess. But this is the case here. I would love to see a public statement and, see how he's managing at this point. But I think if you want to know the whole backstory and everything, check out these articles that I pulled up here. With $1 trillion of distress gone, debt pickers find scraps. I found this to be quite interesting. Specialists in troubled companies stymied by Fed's easy money. So they're turning to property loans and bankruptcy claims. Okay, very unusual to see, not really unusual, I should say, but unfortunate to see where these companies will go in order to get some yield. For investment firms that profit by buying debt of troubled companies, it looked like the opportunity of a lifetime, a $1 trillion pile of distressed bonds and loans in the Americas alone. And then after a massive federal bailout and rock bottom interest rates kept even some of the shakiest companies afloat, those juicy targets have shriveled to less than $100 billion. And they basically say they're going rummaging around. They do get into some other things here. And, they mentioned this right here. I'll pull out the highlighter. People aren't investing. They're just chasing. Okay. To get to higher returns these days, you have to be willing to extend credit to somebody who is not clearly coming back. And that just tells you the sign of the times that we are in right now. Manhattan renters scoop up lingering units in discount frenzy. This continues, and we'll see if it is really a trend or is this something that will simply stall and turn around. GM and Ford cutting production at several North American plants due to chip shortage. This is a very real situation. We have such reliance on these computer chips. And of course, they are produced in one particular area. And so if there are problems with the supply chain at any moment, if there's anything, in fact, that disrupts it, suddenly most of the products that we use today are going to be higher in price, harder to get, or simply problems along the way. Broadband use surged more than 30% over the last year. And I think that it's important for people to understand what this means. More people are working online, more people are buying online, more people are relying on their internet service. So what does that mean? They're sitting in front of the desk. What kind of tools do they need? What kind of services do they need? These are things that are still in high demand. It's not as if that's going to turn around anytime soon. So there is, of course, money to be made in that. There's trends there. I can't give particular financial advice, but I think it's obvious that when you pull all the facts together, it starts to make a lot of sense. And some people are certainly taking advantage. To finish off the video, you can see this. Peter Thiel, or Thiel, I don't know how it's pronounced. Even though I'm a pro-crypto, pro-Bitcoin maximalist person, I do wonder whether if at some point this Bitcoin should also be thought of as part of a Chinese financial weapon against the US. I don't know necessarily that that's the case, but I found it interesting coming from Peter. So we'll see what happens, of course, but I know there's a lot of mystery surrounding it, a lot of uncertainty surrounding it, and coming from a guy who is clearly bullish and is in favor of it, he's questioning it. And I think the whole point is we should question everything, not just to do with Bitcoin and cryptos, whatever. We should always question everything.